You see initial jobless claims coming in at 226,000, bang in line with estimates. A strong labor market continuing to percolate throughout the market. In terms of import prices, year on year, coming in bang in line, 3.5%. You're also seeing export prices coming in at 3.3%. All of this on the heels of Atlanta GDP forecast now coming in around 1% for this quarter. And you have some downgrades coming from big banks in terms of first quarter growth. Well, joining us to help break this down is Michelle Meyer, Bank of America, Merrill Lynch, head of U.S. economics. Walk us through the data that we got today, yes, and this week. How are you thinking about first quarter growth right now?
Sure. So I think the data today showed us a few stories. One, the manufacturing sector remains strong. So we had very strong Empire State manufacturing, 22.5. Philadelphia Fed also very strong. That's consistent with what we're seeing globally with the ISM surveys. It's also consistent with what we saw on the jobs report on Friday with really solid goods producing jobs creation. So I think that's one theme that's been continuously coming out. In terms of the inflation data, it's still somewhat tame. So yes, import prices are heading higher. Yes, CPI is heading higher, wages heading higher, but it's all happening pretty slowly. So I think it's still going to be a gradual trend up in inflation, but certainly on the good side of the economy, all the data has been pointing to continued strength.
Can we keep this up? Can we keep this growth up in the positive direction up without the inflation? I'm not going to refer to any fairy tales about people with porridge.
Right. The G word.
Yeah, the G word, that's right.
So you can keep it up for a period of time. I think certainly for this year, yes, in the sense that you have real momentum heading in. There's a global recovery. And I think what we're starting to see is maybe there is a little bit more capacity out there than we had given credit to on the manufacturing side globally. And maybe even on the labor market side, given that the participation rate did pick up in the last report. So that's the piece of the puzzle. If we learn that there's more supply out there, then yes, you could have pretty solid growth without seeing really problematic price pressures build.
On the flip side, though, like I mentioned earlier, Atlanta Fed GDP Now forecast has a one handle. And we also saw retail sales rolling over yesterday, which is causing a lot of concern of the consumer holding up. How do you factor in these two things?
Yeah, so for Q1, we're tracking 1.7%. And we've been looking for a soft Q1 since we first released our forecast. And that's because
which seasonality, we do see Q1s being really soft, right? Is that how you're looking at it?
Exactly
seasonality?
Right. Yeah, it's residual seasonality. We've seen it every year. And the weaker Q1 goes, presumably the stronger Q2 is going to be, or Q3 is going to be. So we think we're going to see a mid 3% growth number in the second quarter and the third quarter, even with that one handle in Q1. As for the consumer, I think there's a number of kind of unusual things that's happening on a monthly basis, which is you had very strong November retail sales, the early holiday shopping season, and then things softened out. I think into March, I'm a lot more optimistic that sales will resume a stronger trend given that the tax cuts are starting to kick in.